Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right. So at the time of this video, because, a lot of times people go on my YouTube channel where I post these replays and, they kind of see things out of order. So at the time of this video, we are just post the new the tax reform. We're post first filing season. Okay. And during the season, there were a lot, there was just a lot of drama with the season itself because of the new tax change. There were a lot of taxpayers who were not really aware of the impact of those tax changes. So it was traumatic for everybody, right? For tax professionals in the beginning, we had issues with software not being coded correctly, not because of the software, but because the IRS was still issuing guidance. So it was just a lot of stuff going on. But one thing it did do, and I think that, it's sad that it had to come to this, but it kind of woke people up and, into paying attention to their taxes, because at the end of the day, taxes, that's the most expensive bill you're going to have for your entire life. It's more expensive than kids, college tuition, and we already know what that looked like, right? Your housing, it's the most expensive bill that you're going to have. So yeah, it woke people up. That's why I've gotten to today's topic. Well, 5 ways that home business owners can really save on their taxes. Now, let me say this. Home business owners, we pay taxes, okay? We write checks. Home business owners, and I specifically mention home business owners because every business starts at home somewhere, whether it's at the kitchen table, in the garage, whatever, it starts somewhere at home. But if you do it right, you're going to grow into something much bigger. So I say that to say that as you grow, you're going to be profitable. Therefore, you will be writing checks. Home business owners and business owners in general don't get tax refunds because we pay it. All right. We pay based on our profit. The only way we get tax refunds is if we have overpaid in estimated tax payments or something has gone horribly, horribly wrong in your business. Okay. That is how tax refunds happen. So let's go with number 1 is contributing to a retirement account. Now, understand that contributing to a retirement account is not a dollar for dollar tax reduction, but it does help reduce your tax bill because you're putting your money to work for you before you're paying taxes on that, before you're paying income taxes, I should say. So contributing to your retirement account, you keep more of your money working for you, and you're delaying taxes. You're not avoiding taxes completely. Let me say that clearly. So you are avoiding taxes right now, which avoiding taxes is legal. Tax evasion is illegal. All right. So contributing to your retirement account. And listen, guess what, business owners? As much as we love what we do, we need to have money available and still working for us when we can no longer do whatever it is that we're doing. Okay. You're going to get to a point in time where you may not be physically able to continue to work, or you just don't want to work anymore. So you need to have savings. So the best time to start a retirement account was probably 30 years ago, but the second best time is right now. And you can contribute to your retirement account based on the profit from your business. So there are some limitations. So so this is what tax planning is for. Okay. I'm just saying, but you find out, and it's important to know this because in order for you to benefit from having a retirement account, you need to have money available to contribute to said retirement account. So that means you're going to have some profit. You can't be broke and talking about contributing to a retirement account. It doesn't work like that. All right. Number 2, the correct business structure. Listen to me. I need for you all to stop getting Google and YouTube educated on business structures, because what one business structure might be great in one state, it might not be so hot in another state. It's a really big picture thing. So I see a lot of people that are jumping off into the S corp abyss, into the C corp abyss, and you have absolutely no business being there. And you're costing yourself more money in the beginning than what it needs to. I have people who are single member LLCs and should have become S Corps many, many moons ago. But because you don't have structure and bookkeeping in place, you can't make the change. So business structure really does matter. But you got to have your finances in order first for you to properly select the proper business structure. It could be that a single member LLC is really all that you need, because jumping off into an S Corp is going to cost you more money in the compliance part. Right? Because there are some states that are minimum tax states where they don't care how much money you make, you still got to pay. So that's why I'm saying you have to consult with someone to choose the best business structure, for you, your business, looking at your overall tax picture. If you might be the business owner, you might have a spouse that's got some boss out job. So you might need to change your business structure sooner than the other person. So that's why I said you can't just get Google and YouTube educated. You have to go sit down with somebody that's going to look at your entire tax picture and help you make the best decision for you. All right. Business structure. Number 3, reinvesting in your business. Now, the one thing I know business owners have no problem doing is reinvesting in business. However, if but you have to plan for these things so that you're not also going broke in the process. So reinvesting in your business, what are we talking about? You can upgrade equipment. You can have an accountable plan to reimburse your employees. If you need to go, upgrade a computer or whatever, because come the end of the year, you kind of know what your profit is going to look like. So the first thing you do is you look around and say, okay, do we need to buy something, right? Because then you're still keeping more of your money and it's working for you instead of paying taxes on that, okay? So it's got to be an ordinary and necessary business expense. I am not telling you to go out here and buy a Tesla just because you're trying to save on taxes, okay? That is not it at all. But you can look around and see, where you can reinvest in your business to help your business grow, develop your business. If you've gotten to a point where you be ready to move from the kitchen table into your standalone business, a storefront. You might already have one storefront and you're ready to, become a chain. So reinvesting in your business is a way to keep more of your money for you and your business versus paying taxes on that. Number 4, making proper tax elections. Okay. So one of the things with the Tax Cuts and Jobs Act was the bonus depreciation. I saw business owners walking down the streets with pom-poms, marching bands, like, holy cow, this is the most best thing ever. However, bonus depreciation may not be right for you, okay? Because, perhaps you're already operating at a loss. Bonus depreciation really isn't going to do anything for you except show you at a bigger loss. Where if you opt out of that, you have that depreciation that's going to last for a little longer and help reduce profits in the future. So just because an election is available doesn't mean that you should take it. You have got to consult with people to really figure out what's going to be best for you and your business, okay? And then number 5, carryovers. Okay, carryovers get lost, especially between tax professionals. When you are switching tax professionals, you want to make sure that you have all of your tax documents, meaning not just the 1040, but all of the schedules, all of the worksheets, all of it, I don't care how many pages you need to have, especially when you change tax professionals, because that carryover, which is very valuable, can get lost. And we're talking about, capital loss carryovers. If you have carryover for charitable contributions, if you have a home office carryover, if you don't have the documents to tell your new tax professional that, how are we going to know? So carryovers can really get lost in the shuffle and it costs you money. Like I can be the one to tell you the home office deduction carryover helped a kid out this year. Okay. I was super excited for that. But let me also say this with the home office. You got 2 methods for the home office. You got actual expenses and you got the simplified method. If you take the simplified method, there is no carryover. If you take actual expenses, there is carryover, okay? But there's still other things that are wrapped up into that to make you choose one over the other. So no, it's not cut and dry that you should take the simplified or you should take the actual expenses. There's some, there's some things to consider in all of that, okay? It's just, again, it's not a one size fits all. So the point is that you really have to start planning for your taxes. It's not something, I keep saying this every time. April 15th is not the day to think about taxes because there's nothing that we can do. We ain't Harry Potter. We ain't Merlin. We ain't, what's the lady's name, Bewitched, where you can wiggle your nose and boom, everything is fixed. No, no, no. The magic happens now. Planning happens during the year. The work is done during the year to save money on your taxes. It's not going to happen when you file. So this is why you have to have that kind of analysis and oversight in your business, right? We talked about a little bit about having a CFO for your business. So this is why like I said, as business owners, you have to pay attention to this. And with this tax code, you guys, it woke a lot of people up. It was like that dash of cold water while you all warm and snuggly and somebody wake you up with, it's just not, it wasn't pretty. It was a shock to the system. Right? It really was a shock to the system. So yeah, don't sleep on tax planning. Do not sleep on that at all, because the money that you invest to sit down with a tax person and really help you with your tax planning is going to save you thousands and thousands of dollars over time. It's just that people feel like, well, if I don't see the result right now, then it's not worth it. But that is not how this works, because when you think about the tax dollars that you keep and save over time to where that could be somewhere else, whether it's investing in other things like real estate, stocks, whatever you do, right? When you can take that money and it can be making other money somewhere else, this can be, tax saving and planning is going to save you tons and tons of money. But it's going to happen over time and not like right now. It's not a microwave. It's definitely a crock pot kind of thing. Okay. So thank you so much, you guys, for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see you next time. Bye.